about earning six figure, seven figure. It's about maintaining it. My name again is Yemi Legushe, and on this live, I want to talk about taxes and investment. Knowledge is power, information is power. So I'm going to start this today's session by telling you this. There are a lot of wealthy people, and after some time, they were not able to keep their wealth. They were not able to maintain it. So it's not about how wealthy you are. It's not about how much you have in the bank account. It's about how can you manage this money? How can you multiply money? That is why some wealthy people, you are going to hear about them that they were rich before, now they are not rich again. You don't want to be in that position. So there are some things you have to learn, especially if you're a new immigrant in Canada. There are some things you have to learn for yourself because there are tax consequences on your investment. If you were to invest in such a way that you are going to be paying a lot of taxes, then you also need to understand the tax-free investment. That is one of the best things you can do for yourself, to understand the different taxes that is applicable on your investment. So I'm going to explain four different types of taxes on investment. There is tax-free, there is tax deferred, there is tax deductible. Do you want to know the fourth one? Tax-free, tax deductible, tax deferred. Three major tax consequences on investment. Three major tax consequences on investment. Now, so one fundamental truth that you need to know is that we pay taxes every single day. Every single day in Canada, we pay taxes every single day. You go to the mall, you pay taxes. You sleep, you pay taxes. In fact, let me start from the fundamental way that you're going to understand that understanding how investment work in Canada is one of the most important things you can do for yourself. One is when you earn an income, you pay taxes. You earn an income, you've worked hard, you pay taxes. When you invest, there are some taxes that you have to pay on some investment, not all. And again, if you are someone that has bought a property or intent property, there are taxes you pay on this investment property, or whether even it's a residential property, you still have taxes to pay. Now, there are taxes you pay also when you even say you want to go from one place to another one and you book a flight, you pay taxes. When you buy fuel in your car, you pay taxes. So you can see that taxes is everywhere. You go to Walmart, you pay taxes. You go to Costco, you pay taxes. Hello, Rick Moses, how are you? Any question, please? Do you have any question? Feel free to put it in the chat. If you want to send a request to join, feel free to do that. How are you doing? So, how are you doing? So, how does taxes affect your investment in Canada? It does affect. So, if you are doing non-registered investment, at least you should know that a portion of your return or dividends goes to the bank. A portion of your dividend or interest that you earn goes to CRA back because you are going to be paying with capital gains taxes. That is if you are doing non-registered investment. Okay. So again, my name is Yemi Legushe, and on my TikTok, on my live, Instagram, TikTok, Facebook, I like to explain how taxes affect your investment, your savings, your high interest savings account, what you need to know. Maybe you were not told, maybe the bank did not tell you. So I'm going to teach you some fundamental fact that some of us we learned the hard way. I mean, when I say the hard way, we pay with premium tiers. The first thing that I need you to understand is if you have a high interest savings account, let's say you received an email from the financial institution that you use and they said, okay, open this high interest savings account. It is 5.7%, 6.2, whatever they have called the high interest savings account. In that email, take note, they might not actually tell you that high interest savings account is taxable in Canada. So I will tell you what they don't tell you because it's very annoying. Now, excuse me. There are two different types of high interest savings account. If you have your checking account or your savings account, excuse me. and you take money, excuse me, and you take money from there and you put it in what is called high interest savings account. And that high interest savings account is not under a tax-free savings account, is not under RRSP, is not under RESP, is not under FHSA. That type of high interest savings account, we call it stand-alone high interest savings account, and is subject to taxes. Now, there are so many things you can verify within 2 minutes by using Google or ChatGPT. One of such is to actually check, is high interest savings account taxable in Canada? Just ask ChatGPT that question. Because there's some information that some of us learnt the hard way. And because we learnt it the hard way, it does not mean we should make other people learn the hard way. So high interest savings account that you have as standalone, that you don't have that high interest savings account under a TFSA. It is not under a first home savings account. It's not under RRSP. It's not under your child's RESP. That type of high interest savings account is taxable in Canada. Period. It is taxable in Canada. So I hope this helps you to make an informed decision. So the other thing I also need you to pay attention to is the fact that when you have a savings account in Canada, that savings account is taxable. Yes, you heard me right. You can also verify from your bank if you like to verify information, which I encourage you to do. You have a normal savings account. The money you put there is not taxed, but the interest that you earn or the dividend that you earn, whatever you earn on that money, if it is interest, that is subject to taxes. Okay, so that is why we now have tax-free savings account. So I've seen people having money in savings account, they don't have tax-free savings account, and I'm like, can't you see that this one is taxable, this one is tax-free? You need to know the consequences of ignorance. CRA will not say, oh, we know that you are ignorant, okay, take back your taxes. They are going to tax you. If you ignorantly enter a room and in that room there is a lion, the lion will not say, sorry, I know that know that I'm not here. The lion will swallow you up. So there are some things you need to know about investment and taxes in Canada, because CRA is ready to tax you. So you are the one that should be ready to understand tax-free investment. Now, I will repeat my last statement. A normal savings account is taxable in Canada. Period. That is, if you have a checking account and you decided to also have a savings account, maybe because you are used to that attitude before Canada, I get it. But Canada has a system. You have carried your bag, I've carried my bag to come to Canada. So on your normal savings account, the money you put there, CRA is waiting for you. By the time you start generating interest, you and CRA are going to divide that interest. So why wouldn't you put it in a TFSA? So TFSA means tax-free savings account. So I get it. Some people actually think that TFSA is an account that they don't have access to their money, and that is why they are reluctant. So let me correct this perspective. TFSA means tax-free savings account. You can open it, invest, put your money there, invest it in GIC, high interest savings account, ETFs. You can buy shares of Apple, Facebook, whichever you want to do. Now, even though you have invested that money, you have access to it at any particular time. But the only challenge is today is today. If you need the money by Friday, for example, you have to at least have sold the shares and then expect 2 or 3 working days before that money reflects back into your checking account. That's the only thing. So you give it at least 2 or 3 working days. Excuse me, but the money in your TFSA, you have access to it. Just like a normal savings account, you have access to it. But the problem is that your money that is sitting in a savings account is subject to taxes. So you are the one to choose if you just really want to start giving yourself. Maybe you have turned yourself to Mother Christmas or Father Christmas. So we can come back and start coming to you every year to collect our Christmas gift from you. Because a normal savings account is taxable, period. So that's why tax-free savings account helps is one of the best accounts you can have for yourself. There are other types of account, but let us start with that because the amount of money you put into your TFSA, you have access to it in case of emergency, right? But it's something you have access to. I've had people asking me this question: is my money accessible to me? For TFSA, your money is accessible to you anytime. The only thing you should take note is you have opened a TFSA, you have decided to use it to buy shares of Amazon, Tesla, Dollarama, you have decided to invest it in ETFs, you have decided to invest it in segregated fund, index funds. Now, if you need that, if you need to take out the money, it might take 2 or 3 business days. That is the standard practice for any financial institution. Now, most people like to do what? Shop at the best place. You want to buy a shoe and you be like, where can I buy a quality shoe? I need a quality shoe. I want to buy a quality dress. You have sometimes you call your friend, I want to buy a dinner gown. Where can I go to? Where can you suggest to me? So what are you doing? You are looking for the best place. You are you amazing. We are looking for the best place to buy quality items, quality clothes, quality shoes. But when it comes to investment, which financial institution are you supposed to use? Which financial institution can give you like 10%, 15%, 20%? Now, let me make this thing very clear. There are so many things you might need to learn. There are so many things I have learned. In fact, some of it I learned the hard way. If you are an immigrant like myself, okay, see, banks are not the only financial institution in Canada. Banks are not the only option. Once you discover that you have scored 80%, Ozazi, how are you? Once you discover that, because it's a discovery, most people from any continent, Asia, Africa, you have that mindset that, oh, investment, go to the bank, insurance, go to the bank, this one, go to the bank, all your life, bank. But it doesn't work that way. If you have that understanding, I promise you, you have scored 80% first. Banks are good, but if you're looking for investment, where to actually invest, then we have companies that are called investment companies in Canada. Investment companies. There are companies that we call brokerage firms, and with them, you can actually invest. You can buy shares of Amazon, Tesla, Dollarama. You can set up ETFs. You can do it there. If you don't know that fundamental fact and you think it's only bank that is the option, it's just like saying, would you like to know the best place to buy your shoe, a quality shoe, and then you decide to go to buy a quality shoe, at least 1 or 2 quality shoe that will last for a long time. So which financial institution can give you return? Now, some people might not be able to comprehend this, especially if this is your first year in Canada. But if you have lived in Canada for 1 or 2 years and you have done experiments, you have wasted your money, you have also wasted your time, you will understand better that you have invested with Mr. Bank, right? You have done it for 1 or 2 years and you'll be like, something is wrong somewhere. My money is just not giving me good return. Then you will be able to comprehend what I'm talking about, because you can use brokerage firms to set up an investment account and that can even give you high return. So I'm going to introduce myself again. My name is Yemisi Lebushe. I'm a licensed financial security advisor in Canada. And some people think you have to earn 6 figures before you start investing. See, you don't have to earn 6 figures before you start investing. You can start with as little as $50 every single month. Most of you spend or you send Christmas gift, you send monthly black tax home, $100, $200, $500, $1,000 equivalent every single day. So you also need to know that it is money that you invest today that will help you tomorrow. There is money to do fine girl, money to do fine boy, there is money to eat pepper soup, there is money to eat suya, there is money to do whatever you want to do, there is money to pay for rent. There should be money you set aside for tomorrow, because for rainy days, that's what they say. So you can start small. $50, $100, $500 once in a month. Start investing. Start with what you have. You can even invest $30 every single month you are investing, because that's what you have. Let's assume you are the only one in Canada. You have your family back home, a lot of bills. $30 is not too much for you to start with. $30. Did I say that? I mean $30. Okay, I hope I made you smile. So you can start with $30, you can start with $50, right? And you can start investing. And if your capacity is like $500 every month, 1,000 every month, start with what you have. I always believe in starting small because I came from a very, very humble background. I am so grateful for the parent that gave birth to me. I'm grateful for the little that I started with. I'm grateful for the background I started with. So I have the experience of actually starting small, and most of all that I've done in my life, I started small. So I would not say I would discourage anybody from starting small. So even the Bible says, do not despise the days of small beginning. Do not, don't despise those days. So you can actually start investing with as little as $50, $100, if that is your capacity. And if your capacity is more than that, you can also go ahead. You can also go ahead and enjoy it, right? So let me know if anybody in the chat, let us know. Abu, thank you for the likes. How are you doing? Thank you for joining. Thank you, thank you. How are you doing today? How are you doing today? Let me see. Do you have any question for me? Please feel free to put it in the chat. And if amazing, if you want to join the TikTok live, right, or the Instagram live or the Facebook live, I am right here. Rick Moses, hello Charlene, how are you doing? Kisuru, Abu, Emma Majesty, Ali, thank you so much for joining. See, it's not about making six figures, it's not about being rich. I know you know some people that were rich before and they don't have money again. So it's not about being rich. If you are rich today and you don't know how to multiply that money, you don't know how to invest it properly, the money has, even the Bible said it, money has wings and can fly away. What are some of the brokerage companies? Amazing. So we have two popular ones. I personally use Wealthsimple and I can teach you how to set it up. Yes, so if you live in Canada and you want to join my WhatsApp group, I teach about these things very often. So yes, there are so many brokerage firms. Two on the list that are popular: Wealthsimple, Questrade. They didn't pay me for this, but it's something that you would actually hear along the line on social media. And we also have Industrial Alliance. Industrial Alliance is a very good investment company, right? They have been existing for more than 150 years. I think Canada celebrated 159, if I'm not mistaken. And the company that I'm talking about now is Industrial Alliance. They are like 153 years old, if I'm not mistaken. So that also gives you an idea that you can also just check their reviews. Is Industrial Alliance a good company? Now, depending on your sector, there are some sectors like an accountant, an engineer, and a lawyer, especially these three sectors. There are other ones, so but let us focus. I'm doing great. You're welcome. Thank you so much for joining. Thank you. Thank you. Thank you. Nice to have you here. Thank you, everybody, for joining. So, I'm just going to mention these three. If you're in any other sector and you resonate with this, is also applicable to you. But I just need to give some real life examples. So let's say, for example, you are a lawyer and you decide to own your own firm or you practice by yourself, or you're an accountant and you file taxes for small business owner. May we not make mistakes, but we are human beings. You see, as an accountant, you file taxes for a small business owner or a medium scale business owner. God forbid you make a mistake, and that mistake affects that company. The company might sue you. Now, whether there's mediation, whether you conduct whatever strategy you want to do, that could lead to a court case. And if, as an accountant, you have TFSA, RRSP sitting in a normal investment that is not a segregated fund investment, your investment is not protected from litigation or court cases. So people that have that peculiar situation, we always tell them to have your TFSA, your RSP. These are long-term investment plans for your hard-earned money. You should put it in a segregated fund type of investment. Can you see now? Segregated fund is different from mutual funds. They have a little bit of similarity, but the major difference between segregated fund and mutual fund is this. You have mutual funds, and then that your mutual fund is now wrapped with a beautiful packaging material. Why? To beautify it, to protect it. So that is what segregated fund offers. I'll just give you four major difference. One, your segregated fund investment is protected from creditors. Everybody is a creditor in Canada except you bought your house cash or you bought your car cash. There are so many ways you can owe someone money. Okay, so but that your investment, your TFS RRSP is protected from creditors, is protected from court cases, it is protected from what we call probate system. It's also protected from what is called um, unnecessary loss. So it offers 75, I'll call it guarantee. It offers 75% or 100% guarantee. Can we see four main things? So I'll mention some terminologies that might be the first time that you are hearing it. You see, in Canada, there is something that is called probate system. When we all pass away, whether it's in the next 60 years or in the next 40 years or in the next, we all are going to go through the probate system. Probate system simply means what we own as a human being when we are alive. It is considered our estate. You have an estate, you have an estate, I have an estate. An estate means all that you own as a human being. Your car, your house, your properties, your investment, it is considered your estate. The day we gain admission to heaven by the special grace of God, all those things that we own is as it is assumed by law that you have sold it that same day you passed away. They call it deemed disposition. That is Canadian standard. They call it deemed disposition. That is the day that we gain admission to heaven, right? Is the government of Canada treats all that we own as if we have sold it. Now, that means some of this investment, that means the probate system, it will not go to a court case. Somebody called an executor will be the one to say, okay, this person has passed away, let us check. Is this person owing CRA? Is this person owing any creditor? Does this person have a will? Who is this asset going to? Is it the wife? Is it the children? That is called the probate system. Everybody, including myself, we go through that probate system. Now, there are two types of investment that I know that does not pass through that you see, probate system might take 6 months, might take 1 year, might take 2 years. It is unpredictable. So imagine, anyway, there are two types of investment that does not pass through the probate system: segregated fund and the life insurance that you have. If you have investment under your life insurance, you have life insurance benefits. Those two options do not pass through the probate system. Don't. Now, another thing that does not pass through the probate system is if you have registered account, TFSA. Some people will think that this one is not for me. Don't worry. Don't forget that I have told you. So by the time you get an admission to everyone, you remember that somebody told you and you did not do it. It's your family that is going to be affected when you don't do these things. Your family. And that means you'll be giving free money to CRA. Your registered account, TFSA, FHSA, RESP, RRSP, you see these accounts, as good as they are, right? Name a beneficiary on this account. Excuse me. Your TFSA should have a beneficiary. FHSA should have a beneficiary. RRSP should have a beneficiary. And you should also name a successor holder. So there are two different things entirely. If you are married or you have a common law partner, it is good to actually name your spouse as successor holder. There is a reason why. Some people don't love their partner. We are not talking about those people. But if you actually love your partner, you should put them as successor holder. They don't need to know. But this is the benefit. If you don't name them as successor holder, there are some tax consequences on your TFSA. Instead of the money in your TFSA going directly to your family in a tax efficient way, because you did not do these things, or you think you will live forever and admission to heaven occurred before you decided to do it, what happens is there might be some tax consequences because the TFSA that does not have a beneficiary, that does not have a successor holder, at some point you might actually be giving free money to CRE. So at the end of the day, the question is, have you actually worked for CRA, or did you actually work and at least the the bell to enter heaven has sounded, at least your family can enjoy it. So you are the one to choose if you love your family or you love CRA. It's just as simple as that. Very, very simple. Very, very simple. So I'm telling you now, you have, when I don't know currently where you have it, the first thing you want to ask yourself is, my FHSA, my TFSA, is it giving me 1%, 2%? If you don't have it, then the question is, where is the best place to set up this investment? Where is the best place to set up this investment? Okay, excuse me. Please, if you have any question, please put it in the chat. Oh my gosh, excuse me. I don't know why I'm belching this much. Mhm. Any question for me, Charlie? Charlie, any question for me, please? Lami, Abu, Her Majesty, Ali, good evening. Thank you for joining. Do you have any question for me? Okay, no question. So we go ahead. So let me now explain the different types of investment that you could set up for yourself, right? You could have your tax-free savings account, which is TFSA. TFSA means tax-free savings account, and this account allows you to invest tax-free. That is what it means. Tax-free savings account. TFSA means tax-free savings account. Okay? Now, even though you have put money into your tax-free savings account, it should also be invested. It should be invested. You can invest it in GIC, high interest savings account, index fund, segregated fund, and that means that the money you have actually invested would grow based on the rate of return offered by these different investment options that you have selected. Okay, there is a maximum amount of money that we are allowed to put into our TFSA every year. There's a maximum amount. So if you're someone, you came to Canada 2020, and for life situations, you were busy with immigration, busy with school, busy with all of that, that is understandable. But because you came to Canada 2020, 2021, 2022, 2023, 2024, 2025, each of those years you have accumulated TFSA contribution rate that is allowed by CRA, TFSA contribution rate. So for 2020, you have accumulated in 2021. So you have a lot of room, you have a lot of space in your TFSA, and you can put money into your TFSA and start investing. So if you want to set up your TFSA and you want to understand the best place to set up your TFSA and how to go about it, feel free to ask your question in the chat, or reach out by DM if you are too shy, and I can guide you on how to do that. So TFSA, tax free savings account, that is what we are talking about now. Okay, tax-free savings account. So the next thing that I also want to share is the fact that when you have your TFSA, okay, invested for you, you have access to it. I've had that. I have had people ask me this question often in recent times. Oh, I have access to my do I have access to my absolutely. So, and then the next investment account that I want to talk about is FHSA. FHSA. FHSA means First Home Savings Account. That is what it means. It means First Home Savings Account. first home savings account. If you've never bought a house in Canada, you've never bought an apartment or a condo, and you intend to do that, there are some things you need to know before we came to Canada. There were some things we had to do. We had to get IELTS, we had to uh, get visa, we have to book visa, interview date. You have to do some things. So before you buy a property, there are some things you have to do. You have to start saving and investing for the down payment, except you inherited like 500,000 or 1 million that you can use to buy the house. But if you are someone like me that you need to start saving and investing, right, for the purchase of your home, then there are some things that you need to do beforehand. So join me to just talk about what I do. I'm a licensed financial security advisor, and I'm going to teach you this first type responsibilities of a financial advisor by Statistics Canada. Oh my god, why am I belching like this? Pardon me. So here we go. Responsibilities of a financial advisor. Let me show you what I mean. Okay, so here we go. So you see here, it says responsibilities of a financial advisor by Statistics Canada. That's all you need to write. Responsibilities of a financial advisor by Statistics Canada. Okay. Now you want to go to Statistics Canada's website like this. So you want to go there. Okay. When you go there, I just need you to go to this link right here. Statistics Canada. So you click on it. You click on that link, it takes you here. National Occupation Classification Number of a Financial Advisor is 11102. And financial advisors will counsel individuals on financial decisions such as investment, cash management, and estate planning. We establish your financial plan according to your objective. So your objective will determine the type of investment you want. Do you want to do 6 months investment, 1 year investment? That will determine a lot of things. Now here this statement says we are employed by banks, trust companies and investment firms, or we may choose to be self-employed. So for example, if you are looking for you have your 9 to 5 and you're looking for a business that you can do from the comfort of your home, a self-employed business that you can do from the comfort of your home. Now this sector might be what you're looking for, especially if you have accounting background, you have done some professional degrees before Canada, you work in the accounting sector, you work in insurance companies before Canada. Yes, you might be able to get this as your own business and you're able to do it from the comfort of your home, right? You can become a self-employed financial security advisor or an insurance advisor. Do you know how relevant this sector is in Canada, right? Let me show it to you. Right. You see, IRT as to the expert. You'll be like, what are we talking about? We're talking about investment and this is talking about insurance. It's because you don't know what I know. What I know is that, and I wish to tell you is that insurance companies also offer investment. So if you become an insurance agent, you are able to help people invest their money with insurance company and other financial institutions. You are also able to work with a lot of insurance companies. You are able to offer car insurance, home insurance, business insurance to people, and you're able to start earning an income. So just for you to understand the sector where I work, it is called financial services. Engineer Cassie, I see you. Thank you for joining. Please like and share, please. So you see here, IRCC previously added insurance agent to the STEM category for category entry those. They have previously added it. They have not removed it. Okay. Okay. You will see it here. This inclusion specifically target professionals selling and advising on insurance. Can you see that? And you can work with several. So my own case, I'm self-employed. I work with several companies at the same time. That is if you decide to be self-employed. Now let us go to the website. So this is the uh, Canadian government website. So under this, you would read it right there that The insurance sector is also a very important sector in this part of the world. So you see here, it goes under category based selection. Let's see who is eligible. Let's click science, tech, engineering, and maths. Okay, so when you click that, it takes you here. On under STEM category, we have architecture, we have civil engineers, we have cybersecurity, electrical and electronics engineers. Guess what? Can you see? Why will IRCC put insurance agents and brokers under the same category? Why will they do that? Why? It doesn't make sense, especially if you are not if you were not born. It doesn't even make sense. But it's actually listed there. It is actually listed there. And it's listed there for a reason. If it's not important to the economy of Canada, it would not be listed there. So, like I said, as a financial advisor, my job is to counsel individuals on financial decisions such as investment, cash management, and estate planning. And then I establish your investment plan according to your objective. So, your objective will determine a lot of things. Any question, please, in the chat. Any questions? Abby, do you have any question for me? Let's see. Do you have any question for me? Let's see. Charlene, do you have any question? Lami, do you have any question for me, please? Okay. There is none. Let me confirm. Mm. Okay, I don't see any question. That's okay. I don't see any question. So, financial advisors work for, you see here it says, we are employed by banks, trust companies, and investment firms, or we may choose to be self employed. So, the reason why you will see me on social media talking about this is because I'm self employed, right? So, let me know if you have questions regarding this. Okay, now the next thing I also want to share with you guys is if you're new here, you just type TFSA Canada.ca. That's what you need to do to verify some of this information that I'm going to be teaching you. TFA Canada.ca, and I need you to go to the Government of Canada's website, right? To educate yourself about these things. To educate yourself about these things. Okay? One, TFSA. Right here, you are going to see what is TFSA, opening a TFSA. I'm going to take you here. Excuse me, who can open a TFSA? Excuse me, anybody 18 and above, lives in taxes, you have filed your taxes, you have a valid social insurance number. For some provinces, you have to be 19 before you have TFS. When you scroll down, the government of Ghana is teaching you one thing that you think that you know, but they know that you might not know. That is why they put it here. It says how to open a TFSA. Banks, insurance companies, credit unions, and trust companies can all issue you TFSA with different savings and investment options. They are all different. So this is the reason why I said there are different types of financial institution in Canada. There are different types of financial institution in Canada. I hope this helps now. There are different types of financial institution. We have banks, insurance companies, credit union, trust companies. They can all issue you TFSA with different savings and investment options. The same thing for FHSA, the same thing for RRSP, the same thing for RESP. Okay. Now, if you are a new immigrant in Canada, let's say you are coming to Canada with your PR, you have children that is younger than 16. Please, this next discussion is for you. So you need to open this account called RESP. I can help you open it up. I can help you open it with the best financial institution that can give you return. If you open account anywhere, it's okay. But at the end of the day, give yourself 1 or 2 years or 3 years. If the investment is not giving you return, then you need to ask your professional that which company can I use? So if you are migrating to Canada very soon, or you know someone that is coming to Canada with PR, or this whether you spent 1 or 2 years and you've been busy as an international student, you just become you have or you gave birth to a child here in Canada, that child is eligible to have RASP. So far the child is a citizen, right? Even you as a parent, you are still on temporary work permit. Your child is eligible to have RASP. Now, if you say, "Oh, I'm just doing a part-time job, I'm still looking for another job, I'm still looking for a job," your income is low. That is even the time you are supposed to open the RESP for your child. Why? Because the government of Canada adds a certain amount of money to that child's RESP the first time you open it, and the parent income is low. That type of benefit is $500. It is called Canada Learning Bond. So if you don't know, or you just decide not to open it for the child when you as a parent is a low income earner, your child doesn't get that free $500 anymore. By the time you now are comfortable, you want to open the RESP, because you are now a high income earner, the government does not pay this Canada Learning Bond, CLB, Canada Learning Bond. They will not pay it anymore. So you have lost it. So you can actually just open the RESP with $0 because you're a PR, your child is a PR, and you're coming to Canada, or you just got your PR and you want to open investment for your children because you're already receiving Canada child benefit. Let me, like I said, even if you are not working, you're looking for a job, you're earning part time, you're looking for, just open this RESP for your child with $0. And my job is to help you open it, right? If you're interested, feel free to reach out to me and we can book a Zoom meeting, right? So, Canada Learning Bond. So, let me show you what Canada Learning Bond is. The first time you open it, the eligibility is based on the income of the parent. I'm going to open it here. So, you see here it says your Canada Learning Bond eligibility is based on the fact that you and the child lives in Canada. You and the child have social insurance number. You have a beneficiary, that is, you have a child, and the child was born before or after 2004 January 1st, and then the family income is low. So if you have children 1 to 3, you have 3 kids, 1 to 3 kids, and your income is less than 53,000, 57,000, whether you are a family or you're a single parent, the government of Canada adds, in the first year they add $500 to that account in the first year. If in the second year you still fall under low income earner, they add it again. Can you see all this free money that people are missing just because they refuse to know, or they refuse to open? Just open the account with your social insurance number, the social insurance number of your child. Let's say you're in school and you're doing part-time thing and you have a child that was born in Canada. That is the time to open it. There's another, so if you have children that are, you have 4 kids and your income is lower than 64,000 per year, that's the time to open it for that child because the child is eligible. No, that I don't do that. Val, you have to follow immigration consultant. I don't do that. So thank you for asking. So this is the eligibility criteria for the Canada Learning Board. This talks about the income level. I hope this helps you now. Please like and share. Please like and share. So let us go ahead. So that is why once I remember about this Canada this RESP for children, I like to talk about it because if you don't open it, you don't get the free $500, and you just need to open the account. Hello Abu, hello Charlie. Any question for me, please? Any question? Okay. Any question for me? So I'm going to share my screen now. I didn't know I wasn't sharing the screen. So I was saying for RESP for your child, if you open the RESP for your child and you're a low income earner, yes, as so far your child is a PR or your child is a citizen before you became a citizen, that is, let's say you came to Canada with work permit, you came to Canada as an international student, but you gave birth to a child in Canada and the child is already a citizen before you. Yes, opening your child's RESP matters because your child is eligible for Canada Learning Bond, that is CLB, if the family income is between this. So if your family income is less than 57,000 and you have 1 to 3 kids, you are eligible for $500 every year. So maybe you are busy with school and your income is low, at least you are able to open the RSP for your child with $0, and you are still able to get the free $500 Canada Learning Bond. Okay, so I that is for children that are younger than 16. So I mentioned this. If you type TFSA Canada.ca, Canada.ca, it takes you to this website. So you see here, tax free savings account. When you go to this sub topic, okay, you click opening an account, it tells you this information that I said. Once you get this information, you have scored 80% over 100 about financial system in Canada. If you are 18 and above, you live in Canada and you file your taxes. What this statement means is you have open work permit, you have closed work permit, you're an international student, you have study permit, and you have filed your taxes once or twice, you are able to open TFSA and you can start investing there no matter how small. $25, $50, once in a month, right? You can start investing. And here, how to open a TFSA. Banks, insurance companies, credit unions, trust company, they all issue TFSA with different savings and investment options, all different. So when you want to invest and you invest with number one and you see that they are not giving you return, it is where you plant your seed that will determine if it will grow or not. Okay, it's not about this. If you have a very good seed and you plant it on a rock, it will not grow. If you like keep it there for 100 years, it will not grow. It will not. So you have to plant your money, plant your seed where the soil is good, where they can give you good return. Where they can give you good return. So that's what I thought to share. So yes, if you have been able to discover the best place to buy your shirt, the best place to buy a gown or a dress, so you need to know the best place to actually invest. I hope you learned a thing or two today. Taxes affect your investment in so many ways. In so many ways. So one of the things you should do for yourself is to understand the different types of investment and how they are taxed. We've learned about TFS today. I explained RESP for your children. So if you have questions, feel free to reach out to me. My name again is Yemisi.